All right, let's dive into Nucor. They just dropped a third quarter earnings report that was a fascinating story of contrasts. I mean, you have these incredible results, but then they follow it up with a pretty cautious outlook. So what did the market do? It absolutely loved it. Let's break down exactly why. First things first, the headline number, the bottom line. This was a massive beat. Nucor delivered earnings of $2.63 per share, which absolutely crushed the consensus estimate of $2.19. We're talking a 44-cent beat here. That is a seriously strong signal right out of the gate.
And hey, it wasn't just an earnings story. The top line, the revenue, was just as impressive. It came in at $8.52 billion. That's a solid $360 million over what was expected. So you see, it was a clear outperformance on pretty much every level.
Okay, so a beat of this size doesn't just happen by accident, right? You got to ask yourself, what was firing on all cylinders for Nucor to make this quarter so strong?
It was really a story of just pure operational excellence. I mean, look at this. Their steel mill shipments surged 12% compared to last year. And they had the pricing power to go with it. Average sales prices were up 5%. They even hit another record for rebar shipments, all while they were flawlessly executing on their big growth projects. Just really solid.
Now this slide, this is where things get really interesting. See, backlogs are like a window into future demand. And when you see numbers like this, bar products up 35%, with sheet and other products also in the double digits, it tells you this isn't just some one-quarter wonder, this is durable demand.
And a huge piece of that demand puzzle is the data center boom. CEO Leon Topalian really drove this point home with this quote right here. Nucor has basically become the go-to supplier for one of the hottest growth trends in the entire economy. It's not just about selling steel anymore, it's about providing the whole solution. But just as the bull case was looking totally ironclad, management kind of pumped the brakes. Despite that fantastic third quarter, they came out and guided for lower earnings in Q4. So what gives?
And this slide right here perfectly illustrates the conflict investors were facing. On one hand, you've got this stellar report card from Q3, backed up by those strong backlogs and even protective tariffs. But on the other hand, management is clearly warning about headwinds for the fourth quarter. Seasonal slowdowns, lower volumes, weaker prices, and even some planned plant outages.
This is the classic dilemma for an investor, isn't it? Do you trade on the incredible results you just saw in the rearview mirror, or do you sell based on the cautious forecast for what's coming up ahead? So what did the market decide to do?
Well, the market gave a very clear and decisive answer. It chose to look right past all that short-term noise and focus on the much bigger picture.
The stock rallied more than 5% on the day of the call. Yeah, that's right. This wasn't some quiet reaction. This was a massive vote of confidence from investors who heard the caution about Q4, but decided to focus on something else entirely.
So why the big rally? Well, investors zeroed in on the long-term story. They saw the massive scale of that Q3 beat, the strength of those backlogs, and that incredible growth coming from data centers. When you throw in a helpful tariff environment and huge returns to shareholders, well, a single soft quarter starts to look like a pretty minor bump in a very long road.
So, with all that in mind, let's look ahead. This is where we put on our analyst hats. Here's our official take here at Talk Tickers for the next call and what you should expect from Nucor in Q4 and into next year.
Look, we expect Q4 earnings to be lower, just like management guided. But, and this is key, we think they'll still come in ahead of the market's worst fears. The data center and tariff narratives are just too strong to ignore, and we believe investors are going to keep rewarding that long-term story. That's why we're initiating our coverage with an outperform rating and a price target of $168.
Ultimately, it all boils down to this. Can the powerful, long-term growth from sectors like data centers and energy more than offset the usual ups and downs of the steel cycle? The market's reaction this quarter suggests the answer is a resounding yes.
And just a reminder, this is not financial advice.